We do have Kunal Bothra, Naresh Mirani, as well as Deven Choksey with us. A very good afternoon, gentlemen, and thank you so much for your time. Kunal, first up, give us your take on the benchmark indices. Good recovery for Nifty Bank. How are you seeing the index?
Yeah, good afternoon. It's a much better day for the indices, at least looking at the context of the last many days of the mid cap and large cap sell-off. I think today we're seeing traces of large cap names showing signs of recovery. For example, names like ICICI Bank, you've seen Kotak Bank, you've seen Reliance Industries recovering after yesterday's 3% plus kind of a sharp correction. And then you have slew of mid caps and small caps where there has been strong evidence of volume backed buying. So that generally indicates that we are in a process of at least trying to get back into or correct from the deep oversold territories for many individual stocks. On the indices specifically, I think we should just about try to meander around the 22,000 mark over the next couple of days. And I'm sensing that the pattern which we're seeing across the globe could probably deteriorate further, looking at the way the many of the global markets are now getting into a synchronized price correction. So I think even if we consolidate over here at 22,000 levels, say plus minus 100 to 100 odd points for the next couple of days, and if the global market starts to deteriorate, that would still be considered to be a slight positive sign for our markets.
Okay, let's welcome on board Deven Choksey as well. Deven, hi, afternoon. Time to buy yet, or do you think there could be some more pain in store?
Yeah, good afternoon, Asha. Yes, I think it is time to buy. We always tell people that I think when in a falling market like this, you don't buy everything at one go, but you accumulate. So I think keep accumulating, I think good quality stocks at a price at which I think they are currently available and add it to your portfolio. It's better to repent after buying than to regret it thereafter. I think as this is another piece of advice I think that we put across to all our investors. Because when the fundamentals of the business and the companies, they remain intact, and I think they are not showing the signs of deterioration as much as I think the global turbulence is. In such situation, I think one will have to gather that confidence and conviction to buy into good quality stocks. Remember well that current fall in the market is largely due to the misbehavior of the currency, which is forcing some of the global traders to pull money out of the emerging markets, including India. And that situation has largely been played out. If that is so, then in such situation, even if they're selling stocks or even it slows down, maybe the local strength in the market is going to prevail upon. And that's where probably we believe that it is time to buy into some selective stocks. Say accumulate, I think that is the right word. Maybe I think quality stocks, I think it should be another word added to it.
Interesting. Deven, I'm just going to come back to you for your list of stocks as well. But Naresh, what's the market reading like? Any, sectors which you think are looking alarming, and especially what's happening in two-wheelers today with the fall in a Bajaj Auto, Hero MotoCorp as well is languishing. What are you making of the weakness in autos, specifically?
So we were trying to form a base in both these names. Say Hero MotoCorp was trying to pause around that 4,000 mark. And it's broken down and it's coming back to the same price where it all started from. So it's started getting re-rated above the 3,300, 3,500 mark back in 2023. So that should act as a support. We are very close to that band. So actually it's oversold in the near term. We could be setting up for a bounce back going forward. Same is the case with Bajaj Auto, although that rally started all the way from 4,500, 5,000. But it's already given up a lot of move. Say closer to 7,000 odd levels would be a pause even for that stock as well. So not seeing further major corrections from here on, but would be a slow accumulate rather than hurry in right now.
And taking a look at the markets, it's BEL, the stock within the defense bag that is definitely doing well for itself. And some of the other defense counters are having a good day. But Deven, just wanted to have your take on this one, because for BEL, we just highlighted yesterday that given the exposure to the European markets and the kind of rally these European defense counters are having, a likely beneficiary or rather a sentimental impact, a 3% jump is what we are seeing in BEL. But help us with your overall take on the defense counters given the recent fall. Do you believe it's an attractive opportunity to go ahead and deploy some money here?
Yes, I think the corrections have been sharp in most of the counters, and probably I think meaningful correction as well. Because I think the kind of growth that we have seen in some of these counters in the previous year, largely due to the momentum-driven money which came into this counter, I think there seems to be out of this counter, and I think the stock prices are more realistic than before. Given that situation, it may be a good time to accumulate some of these companies with a horizon of 3 years and above from the investment perspective. Nothing that it is going to turn around immediately for most of the businesses, largely to the fact that these businesses have the continuity in place as far as the growth is concerned. Government lifts the material to a certain extent, I think, every year, and that's where probably I think they're given the orders. In such situation, I think assuming 15 to 20% kind of a sustainable growth for next 3 years is not ruled out in some of these cases. And that's where probably valuation in the vicinity around 20-25 times price earning ratio may be justified for some of these counters if one wants to add them or accumulate them into the portfolio.
Interesting. Other than Bharat Electronics, Deven, where else do you think the correction has been significant and valuation looks comfortable right now? What would you recommend buying or adding to the portfolio?
I think majority of the financials, they look stable to me because I think on one side, the government is a big time spender of money in the infrastructure. And that's where probably I think the financials, they remain relatively more stronger than before. So certainly large NBFCs with a retail focus also included into it, or the housing finance focus also included into it. Along with, I think, the corporate banks who are resilient in selling their loans to quality borrowers. So from that perspective, I think some of the financials, they look really interesting in good position. At the same time, I believe that I think the likes of auto and auto ancillary, where the correction has been of a sharper degree, I think he's probably overlooking the kind of a prospects that we are seeing in this sector. That is the fact that I think once you hire disposable income in your hand, your spending ability increases. And given the kind of correction of the stock price fall that we have seen in the auto companies, I believe that I think they, along with the ancillaries, they remain I think, relatively more stable to buy into the portfolio, not aggressively, but accumulate, I think, wisely into your portfolio with quality names. So here are the two areas where probably we remain more convinced. The capital goods segment, definitely, I think where the correction has been of a sharper degree, again, I think is giving an opportunity to buy into because next 3 to 5 years of visibility in capital goods segment equally remains, I think, interesting proposition. So I think one will have to select the companies more than the sectors though, but it is an opportunity out here, including in some of the renewable space where capital goods companies, the manufacturing companies, they play their roles.
All right, Deven, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us.